All right, what's going on, everybody? Today is February 3rd, and I'm just going to do a quick recap of what I saw today coming into the market. So I'll just go ahead and just mark things up the way that I had it, whenever I was looking at the chart and live trading today. So basically, I do like this step down analysis thing that I don't really see a lot of traders do. They do step down analysis, but I don't think the way that they find their bias for the moment is the same as mine, and everybody see the chart kind of differently. So, what I'll do is I'll just go through. So basically, looking at this, our 4-hour was bullish because we closed over the high that made the lowest low in this downtrend right here. So on the 4-hour, we were bullish, and then let's see, coming into the hourly chart, let's see. Let me find out what 9 o'clock is at, because I want to step it up to show you guys how I look at the chart. So, okay. So yeah, so here we have a low that created the highest high on this 1-hour uptrend right here, and I was kind of watching that low to see what was going to happen. So remember, our 4-hour is bullish, and this is what I do: 4-hour bullish, just to kind of give me like a temporary like narrative or whatever. Can I move this? Yeah, I can move this. All right, so 4-hour bullish, and then we're gonna play a couple candles forward. So then right here we go bearish, and this is just all based off of how I see, like, what am I considering bullish or bearish. And my thing is, if you think about market structure and understanding the market structure shift, and I talk about this in my bias versus drawing liquidity video, but basically I use market structure shift to tell me my bias. And today was like an anomaly for me, at least, because our 1-hour shifted bearish right here, and play another candle forward. Our 1-hour shifted bearish. And then when we drop down to the 15-minute before market open, our 15-minute went bullish, and I use swing points. So right here was our downtrend, and then this is the high that created the lowest low, and obviously we closed back above that. So to me, now we're in a bullish trend. So coming into the market, we was 15-minute bullish, 1-hour bearish, and 4-hour bullish, just based off of swing points. So with that being my narrative, I was kind of looking for this to happen right here. So I was like, okay, well, since my 15-minute didn't flip, since my 15-minute flipped bullish, right, and my 1-hour is bearish, that's kind of odd for me, because you would think that the 15-minute would flip before the 1-hour did, but we put in this weird looking low right here. And yeah, so our 1-hour is bearish and our 15-minute was bullish. So I was thinking maybe we was gonna come down and sweep these lows right here, or maybe even this low. And I was banking that, hey, when we come into this 1-hour fair value gap, this was gonna give us a liquidity sweep, and we was gonna push back up and flip everything back up, because this would be the high on the 1-hour. That would have gave us basically us flipping back up. But if we would have came lower and came back up, then this would have been my hourly swing point, given we don't go up above it. This would have been our hourly. We could have came here and flipped here, and then now my 1-hour, my 15-minute, and everything would have been bullish at the same time. So with that being said, I was like, hey, if we come into here, I was looking for reactions coming into here, and this is where I took my first loss for today. Or I did 2 trades. I did 1 loss and 1 win, but essentially I put it up the way that I had it, like this. So price opens up, and then I'm looking for a reaction out of this level to go back long. So what is this? Oh man, we got a long time. Hold on. You can find 930. 930 is here, so play this out some. All right, so when we come in here, I enter in on this trade at that 1 hour fair value gap. I wanted this low inside of this fair value gap to get grabbed. So essentially, when we came into this fair value gap, I wanted this to get down there. And if you was watching price today, we kind of got in here and we was dancing above it. And I was like, okay, well, we already swept this low. This was a low, and we could have just tagged this hourly and utilized this as our projectile or our fuel to be able to push us up. Well, once we were tagged into this trade here like this, I immediately moved my stop to here below the fair value gap, the 1 hour, because I'm like, hey, if we come back in, we could potentially grab this, give us a swing point, and then go up. It's just discretion, just how I'm viewing the charts, because if I was looking for longs, this would be the best place to get in for longs, and I would have been targeting the opposite side of the high, like basically the other side. And then we was also below the midnight open and the 8:30 open, so we was in discount. So I was looking for them longs to go back up to flip the hourly back bullish, and we continued up for the day. Well, we know that didn't happen, so we would have got stopped out there. Immediately I'm like, okay, now I'm waiting the first 15 minutes, okay, because now I want to see at this point, is my 15 minute going to flip bearish with the 1 hour? I want two time frames to be by each other as far as direction goes. And in this moment now, we got a 4 hour bullish and a 1 hour bearish, and then a 15 minute bullish. So now I'm waiting on my 15 minute to at least go bearish. And if we go bearish on the 15 minute, we have this big 4 hour imbalance right here as my target, and then also the 50% of this big 4 hour imbalance right here as my target if we do flip the 15 minute bearish. Okay, so I'm just gonna go right here. So here we flip the 15 minute bearish. So now I have a 4 hour bullish, a 1 hour bearish, and a 15 minute bearish. And I have enough room to be able to get into a trade to tag this 4 hour imbalance and try to get down into the midpoint of it. Given the fact that, hey, also if I go and I draw my fib from the low on the 4 hour chart up to the highest point on the 4 hour chart, that's in alignment with the 50% of this leg up right here. So if I get in a trade here coming down into here, targeting the 50% of that 4 hour fair value gap would have been a decent enough draw for me to be able to say, hey, that's enough for the trade. So my first trade was a loss. And then once I realized, I'm going to play this forward. Once I realized, hey, we flipped that 15 minute down, check the 5 minute. We have a 5 minute fair value gap way up here, and then what is it? My entry was off of the retracement inside of this 1 minute fair value gap. So sorry about that, my daughter came in. So I entered essentially like at the 50% of this fair value gap here on the retracement, and expecting this to hold. So then I put my stop above the third candle's high. What I've seen is on market structure shifts and fair value gaps, if we're going to inverse this, we can inverse this. But given that, hey, my 1 hour is bearish, my 15 minute is bearish, and it seems as if we're tracking towards the 50% of that 4 hour leg to be able to give us another leg to go back up. Any fair value gap on the way down, I'm expecting it to hold. A safer stop could have been here above this swing right here, because this would have gave us a market structure shift up. But I'm using this fair value gap as a sense of like support, and I'm using the third candle in this 3 candle combination as my invalidation point. So I put my stop above that right there. And we came very close to getting stopped out today, and it was a live trade, and I was just like, man, if I lose the trade, it is what it is. But my target was the 50% of this 4 hour even like a little bit above it, just a little bit above it. Because we can come down and get the playing around and stuff like that. I've seen a lot of times where we come down and we'll just barely tag it right. But ultimately, we in this trade, and I've seen a lot of traders take this inverse up. It made sense to them. It didn't make sense for me in the way that I trade and the way that I'm looking at things. This point right here will be our 1 minute market structure shift, and this is part of the reason why I don't just take inverse fair value gaps, because I see them fail when it makes sense, but when I have a market structure shift that's in alignment with my higher time frame, I'm more likely to take that trade. So I use this one as a resistance level. And yes, we traded up above it, we inverse it and things like that. But using this 3 candle combination, I'm giving it a little bit more breathing room up to this third candle's high to hold. And then ultimately we ended up, coming down. And I think I got out of this trade. I got out of this trade before it actually hit here. One of these candles, I think it was like this candle. Once I seen the rejection here, I was like, okay, well, we could put in like a 5 minute inverse or something like that. So by this time, we were already up. I just entered here. By this time, we was already up 130 something points, 37 points at the time I got out of the trade. But that's my trade recap, and I hope that sheds some light on how to step down your higher time frames. And just given the fact that at market open, it was crazy because, again, like I said, my hourly flipped bearish, but my 15 minute didn't. So me moving forward, I think if I have like a break in my higher time frames, meaning like bullish, bearish, bullish, I'm going to wait, or bearish, bullish, bearish, I'm going to wait until at least my 15 minute gives me the direction of which one we're going to go. I want like if they're right by each other, meaning 4 hour to 1 hour or 1 hour to 15 minutes, I want at least 2 of them to be in alignment for me to decide which direction I'm going to trade into. It just gives me a little bit more conviction in the trade. But like I said, today was like an anomaly for me to where my 1 hour flipped bearish, and I haven't seen that, and I've done a lot of back testing, but yeah, my 1 hour was bearish, and then my 15 minute was bullish, and I was just like, yeah, I don't know, but I took a stab at it. I mean, I don't think it was a bad idea coming from here up, given the fact that our 4 hour was bullish, and my 15 minute was bullish. It's just lessons learned. But yeah, that's the trade recap for today. 133 points is what I caught for today. Yeah, 1 loss, 1 win. I made my money back and then some. Easy days, kept the composure, stayed patient, didn't try to rush and try to follow this down, because, hey, rushing and trying to follow this down, I wouldn't have been able to get in a clean entry. We could have flipped at any given point in time, especially if my first entry was here at the open. We had all of this time to be able to flip and come back up. We had all that time. So once I seen that we was like right here, this far away, we would have had to have a serious green candle just come in and just crunch all the way up. But we didn't have that. So that's my trade recap of the day. Feel free to follow me on Instagram at It's Just Trading. And y'all have a good day.